A very warm welcome to all our viewers across Southeast Asia. This is C Crypto Daily Buzz, and today is Monday, March 23, 2026. We are here to summarize the most critical crypto news for our dedicated community of investors, traders, and long-term holders from the Philippines to Vietnam and throughout the entire OFW community. In today's deep dive, we have three major stories that could significantly impact your portfolio and how you manage risk in this evolving digital economy. Let's get straight into it. Our first story today, Morgan Stanley is quietly building a massive full-stack infrastructure around its new MSBT Bitcoin ETF. They aren't just filing for an ETF. They are constructing a complete Wall Street ecosystem to support long-term institutional and retail adoption. According to recent SEC updates, the bank is refining the MSBT application with specific details like a 10,000-share basket size and a significant seed investment. They've confirmed BNY Mellon will handle the cash custody and administration, ensuring a robust framework for high-value institutional flows. Furthermore, Coinbase has been tapped as the prime broker, responsible for holding the fund's physical Bitcoin in high-security cold storage environments. Interestingly, the bank even conducted operational audits by purchasing initial shares on March 9th to test their internal settlement systems. Beyond the ETF, Morgan Stanley is preparing to launch direct spot trading for Bitcoin, Ethereum, and Solana for millions of retail users via E-Trade later this year. This will utilize zero-hash infrastructure for liquidity and settlement, making it easier than ever for mainstream investors to access these core digital assets. For our viewers in Singapore and the Philippines, this is a clear signal. Major banks are no longer treating crypto as a niche experiment, but as a core financial service. This normalization increases liquidity, but it also means Bitcoin will be more tied to traditional bank-level risks and regulatory decisions than ever before. Moving on to our second story. The Asia-Pacific region has entered a critical stress test phase for crypto compliance and stablecoins. We've moved from the era of writing rules to the era of strict enforcement. 2026 is becoming a decisive year for exchanges and stablecoin issuers. A key milestone is Vietnam's new DTI law, which came into full force on January 1, 2026, marking a significant shift in local oversight. This law focuses heavily on automated tax transparency, ensuring that digital asset transactions are properly tracked and reported within the country. Simultaneously, the OECD's crypto asset reporting framework has started its first period in over 50 jurisdictions worldwide, ending the era of hidden accounts. Most APAC hubs now treat the FATF travel rule as a basic operational requirement. If a firm isn't licensed, they are effectively cut off from the global system. Japan and South Korea are leading with advanced institutional pilots, while Indonesia has shifted all crypto oversight to its main financial regulator. Markets like Australia and Taiwan are also pushing for strict custody and tax reforms to bring digital assets into the mainstream securities fold. For our Southeast Asian investors, the lesson is simple. The room for regulatory arbitrage is shrinking fast. Compliance is no longer optional. Risk management now means aligning your activity with exchanges that pass this stress test and hold valid local or regional licenses. Finally, a serious security warning. The Betterment data breach shows how scams are now weaponizing trusted fintech platforms. The U.S. robo-advisor Betterment confirmed that attackers used social engineering to bypass security on third-party marketing tools. This exposed names, contact details, and dates of birth, giving hackers the exact data they need to craft highly convincing personalized scams. The attackers then sent fraudulent notifications from within the platform, promising users they could triple their crypto value instantly. They asked for a $10,000 transfer to a private wallet. This is a classic multiply your funds scam, but delivered through a brand you trust. For our OFW community who rely on fintech apps for savings and remittance, this is a critical reminder. Never trust an urgent request for funds. Always verify any suspicious message through official support channels before moving a single peso, dong, or dollar from your account. To recap today's buzz, Morgan Stanley is going all in on Bitcoin infrastructure. APAC is tightening the screws on regulation, and the Betterment breach reminds us to stay vigilant against social engineering. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell to stay updated with the latest in crypto news. For real-time alerts and trading signals, join our Telegram channel, link in the description. Thank you for watching, and I will see you in the next one.